Off Limits is the money podcast that blows up stereotypes, showing you that managing money doesn't have to be hard.
We want you to thrive, not only with your money, but in every part of your life.
What you will get out of this podcast is real, relatable, and relevant tips and strategies that you can apply today. Hi, I'm Donald Raymond, and this is
Christine Spiak. We are money coaches, business owners, and colleagues who are passionate about helping you become more of who you are. So if you're ready, join us.
Welcome to another episode of the Off Limits podcast. We're your hosts, Donald Raymond and
Christine Spiak.
And today we're diving into the crucial topic of insurance. We'll explore how being properly insured is fundamental to ensuring and establishing a secure financial foundation. We'll cover a range of insurance types from home and auto to term life, health, disability, long-term care, and even identity theft protection. Whether you're a financial expert or just starting your journey, this episode will provide you with valuable insights.
Now, we don't want to lose you already. We know this might not sound like a really exciting topic, but please tune in, keep listening, because having insurance coverage is one step, being properly covered is another thing entirely. In each of these categories, consider if the type of insurance is necessary for your household. If it is, and you already have the insurance, review your policies to make sure you are properly covered. If you don't have one of these policies, then work with an insurance broker to find the best coverage for your household. And in your estate planning for each policy, be sure to include the company name, the policy or account number, the website login information, and the phone number. We want you guys to be prepared, don't we, Donald?
That's right. Being prepared is the goal.
So let's start with the basics. Why is insurance such a critical element of a secure financial foundation?
Well, it's really quite simple. Insurance serves as a safety net, shielding you from unexpected financial setbacks. It provides peace of mind and financial security, helping you protect your assets and your loved ones. And we know insurance isn't glamorous and fun to shop, but it's just one of those must-haves that you'll be thankful for when you need it, and kicking yourself for if you're not prepared when something happens. Everyone has an example of being covered properly or not being covered, and how that affected them both financially and emotionally. We're just saying it's better to be safe than sorry.
Absolutely. So we're going to begin with the two most common types of insurance, home and auto. Why are these so essential for our financial well-being? Well, home and auto insurance protects your most valuable assets. They cover property damage, liability, and theft, ensuring that unexpected accidents or disasters don't lead to significant financial burdens. Now, I'm going to share a personal story with all of you. Years ago, when I was newly graduated from college, renting an apartment, I thought it would be great to have a renter's insurance policy. Not that I was excited to spend the money on it, but I just figured I live on my own, it would be a good protection to have. So I bought a policy. Well, not too long after that, my husband, then boyfriend at the time, and I were going on vacation. We lived in Rochester, New York, and we were going up to Acadia National Park, way up in Maine. Because it was such a long distance, we decided when we got done with working, we would drive as far as we could until we were tired, pull over, spend the night, and then the next day we would continue on with our journey up to our final destination. We had everything packed from sleeping bags to a tent because we were going to be camping for a few days, food, our pillows, anything you can imagine that you would need for a few days of camping. We had it packed up in our car. So we drove all the way to Springfield, Massachusetts. We got tired, we pulled over, we stayed in a Days Inn. The next morning, my husband goes down to the car, and he's wondering, what did Christine do? Rearrange things last night? Because I had gone down to get something out of the car late at night. Well, I didn't rearrange anything. He realized as soon as he saw that the stereo was ripped out of the dashboard that our car had actually been broken into. And when I tell you they stole a lot, they took the pillows that we were going to lay our heads on that night. They took the stereo. They broke the door. They took a lot of our possessions. What they didn't take was a gym bag that the zipper was broken on that was full of a bunch of different types of shoes. Now, I don't know if they ran out of time, if they just saw what was in the bag and realized they weren't going to get any money for it, but they left it there. And unbeknownst to me, in that bag was an engagement ring. My boyfriend was going to propose to me on that trip.
Wow.
So needless to say, the trip took a much different turn than we thought it was going to. We couldn't camp because they stole all of our camping gear. We ended up going shopping, buying everything, new clothes, new bathing suit, new towels. And when we got back from the vacation, I filed the insurance claim. And luckily, most everything was covered. And if I didn't have that renter's insurance policy, nothing would have been covered.
And early in a relationship, early in your financial journey, that's a big deal, right? You're newly graduated, first job, you're renting. Now you didn't know it, but you're getting engaged, right? You know, life is starting. And without that insurance policy, you know, you guys had to spend not a huge amount of money, but significant for anybody, right? And the fact that you guys were covered, though, man, what a blessing. What a great story.
It really was. It really was. But, you know, there's that financial piece to having insurance policies, but there's also the emotional piece as well. And that whole experience, it really stayed with me. I mean, all the way up until now, you know, over 20 years later, I'm always like self-conscious of, did we lock the car? Where are we parked? Where are we staying? You know, it had a lasting effect on us, but I'm just so glad that we had the insurance policy coverage to at least handle the theft at that time.
And you know what? Not that I'm glad this happened to you, but now that you're a coach, you know, what a great story. What a great thing to be able to share with clients, with our viewers, and just be able to give a real life situation, right? This wasn't life-changing money, but given the circumstances and sort of the scenario that the picture you just painted, it was a life-changing experience for you guys. You know, all the things that you were going through, everything that was about to happen, the reason you were going on the trip, and the turn in life that you guys were getting ready to make. You know, getting married and starting a family and beginning that journey. You know, and for this to happen and become a story that you can share later. I mean, I think your path to becoming a financial coach may have started all the way back there, you know, as you started developing and having these experiences that you could share later. I want to thank you for sharing with us. That was great.
Yeah. Thank you. I appreciate it.
Yeah.
I really believe that even in the most awful situations that you go through in life, there is a gift and there is something positive that you can take from it. So the positive thing was I got engaged and now happily married all these years later.
And you got all your losses covered by your insurance policy that you didn't even really know you needed. But luckily you took you were proactive, you were intentional. You know, you didn't, like you said, you didn't know a whole lot about insurance getting started, but you had an opportunity to get some insurance. Sounded like a good idea. Maybe it wasn't very expensive. And so you were covered. And what a good thing that you were covered, because the outcome of that story could have been much, much different, especially if they had taken that bag.
Yeah, absolutely.
So moving on, we've got term life and health insurance. And we want everyone to know about the risks and the benefits of each of these insurances. They go by different names, but basically there are two types of life insurance: whole life and term life. And in most cases, term life will be our recommendation for just about everybody. We recommend 10 to 12 years of your current annual salary for coverage, and this assumes that your income is supporting a family that would be left in financial distress without the contribution. For anyone who's single, this is still a good policy to have, but unless someone is depending on your income or would be burdened by the loss of your income, then it's not necessary. But that said, you should still definitely try to qualify for coverage before the age of 30, and this is just to ensure the best rate. Health insurance is also divided into two categories: high and low deductible plans. There are a couple of things to know here too. One of the benefits that we want to point out is the HSA plan, which is a health savings account, and this is available to high deductible plan holders. This money can be saved, grown, and spent tax-free, and is the best option for almost everyone. If you don't qualify for an HSA, then an FSA is a good option too. And this stands for a flexible spending account that you can add to and spend tax-free. within a calendar year. But you have to do some math because whatever you don't spend will be lost in the next calendar year.
Yeah, and I have experience with that one too, Donald. Can I share another story with you and our audience?
Please.
So for many years, we had the FSA account. My husband's company didn't have an HSA as of yet, so we would participate in the FSA. And like you mentioned, if you don't use it, you lose the money. Mm-hmm. So it's really critical that you use all the money. So a couple of years back, we get to the end of the year and we just didn't tap into this account as much as we thought we would, whether we didn't need it or we didn't use it, whatever the reasons were. We had several $100s left in this account at the end of the year. So my husband and I are members at a BJ's. We're like, we'll go there, we'll bulk up on all of our medical type products that we need for the upcoming year. We thought it was a great idea. We get there, we do all of our shopping, we go to self-checkout, we run everything through the scanner and get to the end, and I have my FSA card in my hand, which looks just like a debit card or a credit card. That's, you wouldn't notice anything different to it. And I'm putting it in the machine and it's not, it's not taking it. And I'm starting to get embarrassed because to me, like, I have money to pay for this, but the fact that this machine is not taking my money is really starting to embarrass me. Right. So an employee of BJ's comes over, and I think just by looking at all of the products we had, she realized right off the bat that we were trying to use an FSA card. And she said, unfortunately, our policy is we don't take them. So we had to walk out of that store, without any of the products, feeling embarrassed that we couldn't buy something. The people around us, they didn't know why we weren't getting what we had intended to buy that day. And it was their time, it was our energy, it was, all of it. And we left there and we went to another store, Walgreens, and we spent a few $100s there. So you definitely want to make sure you spend it before you lose it, because you'll lose it and you won't get it back.
That's right. Yep, it's a use it or lose it policy. It's not a bad policy, but certainly not as good as an HSA where it gets to that money is actually invested. Some of those plans allow you to be proactive and actually manage those investments through whatever mutual funds they're partners with and whatever types of opportunities they give you. Others are managed for you, but in both cases, they're going to earn a return over time. And so, the fact that you can keep that money in effectively a long-term savings account or a high yield account, or even you could call it a small brokerage fund. That money will continue to grow. And of course, like we said, it'll do it tax-free versus the FSA, which is year by year. And as long as you are proactive with that and do your homework, like Christine said, it'll serve you well. Putting your deductible into your FSA is a great way to leverage the power of the FSA. Also, with the high deductible plans, make sure that you have enough to cover that deductible as well. And so just leveraging the power of both of these, because there's no right or wrong. It's just whatever you qualify for. Every employer is different. Every health plan is different. And so we just want you to understand your options and just know that if you have an HSA option, you will probably also have an FSA option. But if HSA is available, we would recommend that you participate in an HSA over an FSA in almost every scenario. That's not to say that there's not a scenario out there that wouldn't be better served with an FSA, but in most of them, the HSA is going to be the best option.
And in every scenario, it comes down to your household, the needs of your family, whether it's medical, auto, home. You really have to take an individualized approach whenever you're buying any type of insurance. So let's discuss disability and long-term care insurance next. Why are these forms of coverage so important, Donald?
Well, disability insurance replaces lost income if you become unable to work due to a disability, and long-term care insurance helps to cover the often substantial cost of nursing home or in-home care as you age, preventing your savings from being depleted by healthcare expenses. This is a growing category as the largest part of our current population is entering their final stage of life. So if you want to avoid the hardships and spend the final years with your loved ones building memories and growing closer, then you need to be prepared for the financial responsibility that's coming. And a little bit of effort and sacrifice now will pay off big when those medical bills start adding up.
According to a CBS News story, you're generally able to buy a long-term care insurance policy at nearly any age, assuming that you qualify based on the insurer's unique requirements. However, there is an optimal time to purchase long-term care insurance, and that's typically when you're in your 50s or early 60s. It is a very expensive form of insurance, as you can imagine, because it's there to provide coverage towards the end of your life where you're spending a lot more in medical costs. So it's really important that you know what the policy is going to cost you each month and work that into your budget so it turns out to be something you can pay for instead of something you have to go without.
And like any insurance, this is one of those deals with investing, with insurance. The sooner you can get it, you heard me say with life insurance, if you can qualify before the age of 30, you'll get a better rate. Well, this is the same scenario. So if you can start to qualify for long-term care in your 50s, odds are you're going to get a better rate than if you wait until you're in your 60s or even later. And it also gives you a little bit more time to build up a balance. And so just do your homework, do your math, get started when you can. And do your research. Find somebody that you can work with, an insurance provider or an insurance broker that can help you kind of walk through the options, walk through all the different policies that are out there, all the different providers that are out there. And you just want to start doing your homework. And this is another place where we say it all the time, but being intentional matters. And the sooner the better. And you don't, once you start building these accounts up, like don't start being tempted to liquidate them. If you have a lot of money in an HSA, don't treat that like an emergency fund. Let that be the HSA. Start building up an emergency fund as well, and just treat all of these accounts very intentionally. Use them for what they're for, right? I make the analogy sometimes that, people get frustrated when they buy a screwdriver and they have to hammer in a nail because a screwdriver is not a hammer. And so we want to use these tools the way they're intended to be used. Right, Christine?
Yeah, exactly. And we want you to be able to afford them. So we don't want you to skip over any type of insurance because you can't figure out how you're going to work it into your budget, whether it's for a short-term time or a long-term period of time. We really want you to be able to be in a position where you can insure yourself properly. I got a phone call today from a client of mine who they recently received a letter in the mail saying that the husband's automobile insurance policy was either going to be taken off their policy because he had too many accidents in a certain amount of time period, or it was going to triple in cost. So you can face things at any time, and we just want you to be able to be prepared to pay for these insurance policies.
That's right.
So lastly, we have identity theft protection. So why should you consider this type of insurance? Technically, it's not insurance. However, in a general sense, identity theft protection plan can be a lifeline in the face of identity theft and financial fraud. It offers assistance in restoring your identity and minimizing financial losses, making it an essential component of your overall financial security. While no one can prevent identity theft from occurring, having a company monitor and restore your identity to pre-theft status will take the burden off of you and potentially save you thousands of dollars and many hours of stress.
Yeah, and I'll just share just quickly that I've never had my identity stolen, but I do have identity theft protection. And there's been a couple of occasions where I've gotten the phone call or the email from that service, and they've said, hey, we noticed this activity, looks suspicious. And in most of those cases, it was just our own personal activity, just something that was out of the norm. And they were letting us know that there was something that potentially, the system had flagged as fraud. In a couple of cases, it was potentially going to result in fraud. So in those scenarios, the system caught it proactively and asked for my permission to sort of track the transaction and follow it through so that they could apprehend whoever was responsible. In none of those cases did I have to get replacement debit cards, freeze my accounts, or any of those things. So just from a very, high level general perspective, it's just given us peace of mind. And I know that the system is working because they're reaching out to me proactively. These are not scenarios where I called them to see what was going on. They reached out and they ensured that the transactions that were going through were legitimate, or if they weren't, they actually took proactive measures to ensure that I was protected. And so I can definitely speak to the hours of stress relief, because I don't worry about identity theft. And if it happens, I know I'm covered, right? And so these insurances, in our case, is actually because of our relationship with our bank, our primary bank. In other cases, there may be a fee, but in most cases, it's a very nominal fee. And for the amount of money that you are protecting with this insurance, or like Christine said, it's not insurance, but it's insurance, right? It is so worth it, especially in today's technological age. You have to be smart. You have to protect yourself and your family.
Donald, I don't know about you, but when I bring this up to my clients, 9 times out of 10, it's something they never even thought about before. Mm-hmm. It never occurred to them to get this type of protection.
Kind of blows your mind, doesn't it?
Right. And because they've never thought of it, they don't know where to turn. So I often recommend who we use ourselves, which is Xander, and the protection plan has been great for us. Do you use them, or do you have a company you recommend?
So like I said, our bank supplies it. It's one of the perks of the relationship we have with the bank.
Sorry.
But I have used Xander for other reasons. So Xander has helped us save money in the past by shopping other insurance providers for auto, home, and other ways that we could bundle our insurance coverage. And they were able to find us some policies that were actually better, more coverage for less money. And so we've made some adjustments throughout the years by utilizing their services. So they operate not just in the identity theft sector. They operate across all insurance providers. So they're definitely one that, from personal experience, I would recommend them. Give them a call, send them an email, and let them get you some quotes from some providers and see if they can help you with reducing your rate or getting you better coverage, or both.
Well, hopefully we didn't bore our listeners today. Hopefully we gave them just enough information to be curious, to want to learn more, and to engage with their insurance policies for their household to make sure they're properly insured.
Yeah, 100%. I echo that completely. It's like a recipe, right? You're adding salt and pepper. You want just enough, but you don't want to be able to taste the salt and pepper by itself. So yeah, hopefully this was just the right amount. And as we wrap up, so let's recap just the key takeaways and offer a couple of action steps for everyone. How's that sound?
It sounds great. Let's do it.
So we want you to, number one, take stock of your current insurance policies and review them regularly. And we're going to recommend at least annually. If you're new, maybe a couple times a year until you find those policies that are really working for you. If you're younger, starting out in life, you're probably going to interact with these more because things are changing more rapidly. As you age, things start slowing down. At least that's been my experience, and you can kind of settle into a routine. So definitely take a look at what you have if you haven't recently, and then review them at least annually, just to make sure that you're covered with the appropriate coverage. The next thing is going to be ensure that your coverage is adequate to safeguard your assets and loved ones. And this is something that your insurance provider will typically do for you, and they'll just do an assessment, ask some questions, and make sure that you've got the appropriate amount of coverage, because there may have been some things that have changed. You may have, replaced some vehicles. You may have moved out of a home into a different home. You may have added children or other things to your household, whether they're living or just other assets. You might have something new that wasn't in your last policy. So this is an opportunity to get that identified and get it covered correctly. And then we want you to recognize the integral role of insurance in your financial planning. It's a foundational element of financial security. So, just like Christine said, so many people are operating with no fraud protection. And in today's technological age, I just cannot stress enough. I feel like it's the new definition for cheap insurance, right? Fraud protection is today's cheap insurance. This is the thing that will prevent so many unnecessary headaches and so much loss in certain cases. So we also have a quote for you today, and I think, Christine, you're going to share the quote.
Yeah, this is a great one. It's a visual one, and I'm a very visual person. So insurance is like an umbrella. You don't need it unless it starts to rain. But if you don't have it with you when it's already raining, it's too late to go home to get it. And that's anonymous. But I just like that visual very much, because to me, really, what is insurance? It's protecting you. It's protection. And if you need the protection when it's too late, then it's too late to get the insurance policy.
Yeah, you said it's visual, and like I'm just picturing somebody standing out in the rain just soaked, right? So, whether it's fraud protection or life insurance or whatever the situation is, just make sure you're covered. And that word covered, right? We talk about insurance coverage. It's the umbrella. It keeps the rain off of you. So absolutely. Great quote. And our book recommendation, as we do every episode, is Expect the Unexpected While Overcoming Your Greatest Fears. And that's going to be by Reese-Peelpez. And it's a fairly short read, but it really speaks to, being prepared, expecting the unexpected, or preparing for the unknown in our case when we're talking about insurance. So give it a read. Like I said, pretty quick read, short book. I think you'll get a lot of good takeaways from it.
Yeah, it's not one I'm familiar with. I'm excited to check it out. So in conclusion here, securing a strong financial foundation involves having the right insurance in place. We hope this episode has equipped you with valuable insights and, more importantly, inspired you to take proactive steps towards securing your financial future.
And don't forget to like and subscribe to our channel if you haven't already, because it really goes a long way toward helping support us and ensure that we can continue to produce this content.
And please leave a comment for us as well. We'd love to hear from you and might even answer your question or cover your topic in a future episode.
Thank you for joining us on this episode of Off Limits.
Beyond the podcast, we are money coaches who want to help you.
So if you are looking for help managing your money, use the links in the description below to contact either of us and learn how coaching can help you thrive.
Lastly, please help us to spread the word by subscribing, leaving a comment, and sharing our podcast with your friends and family.